training, and the technical training that I wanted to show you today was the technical indicator called Traders Reality that I use. It's besides the MACD, it's the only indicator that I use, and I'll show you how I use it. I'll hide the drawings. Perfect. So this is Traders Reality. I'll show you how I use it daily. So when I wake up and I check the 1 day, and I check the 1 day for one thing and one thing only, which is the vectors. I check the vectors to see how we are on the daily, if we've had any particular vector. There are 4 types of vector candles. Vector candles are big volume candles. The purple one is the stop volume, which shows reversal, and so is the blue one. So the blue one at the bottom shows reversal towards the top. The blue one at the top shows reversal towards the bottom. Same with the purple one. Purple one at the top shows reversal to the downside. Purple one at the bottom shows reversal to the upside. Now, just like any indicator, this is also subject to failure. Like you can see, even on the daily, you have to take it with a big pinch of salt, because there are times where, for instance, here it's at the bottom of a swing. This is the swing that comes down. You have the buyers taking control, and the buyers fail, and the next one is a sell vector. So even if the buyers try to take control here, the sellers won the next day, and this is the big spill that we're in. Here the buyers are starting to take control, but that doesn't mean that in the coming days we don't have a continuation of 22% on Bitcoin to the downside. So quite a lot. Like, it would be liquidated if you were to rely entirely on this indicator, which I don't advise you to do. No indicator is very good, Pico. Michael, sorry. My mind's always switching between your name and your nickname. Perfect, no questions. Let me know. I can see now that you're texting me. So I start the day to see where we are, to see who's taken control last. So here we have the sellers taking control last. We don't have any reversal indicator on the daily yet, so that means we're still under pressure to sell, which goes hand in hand with where I believe we are, because we are still wow, we are still following the channel trend line. So we're still following this, and again, I use it as a confluence indicator rather than a decision-making indicator on the bigger time frames. Then I switch to the 4 hour. You know, my time frames are the daily, the 4 hour, the 1 hour, and the 15 minute. On the 4 hour, the situation looks slightly different because we have 3 stop volume indicators on the way down. This is huge. It means the market makers tried to stop the spill here, and they didn't succeed. The spill just kept going until we have this blue vector here at the bottom of the swing, and this blue vector tells me that we might have a reversal to the upside, which is where my own pattern analysis is as well. So on the 4 hour, I use the vector candles, and what I also use is this EMAs. It took me a while to figure out how to use the data window on TradingView. This is the 200 EMA. So I don't use this on the daily, because on the daily I have my own MAs, but on the 4 hour and the 1 hour and the 15 minute, this white line, and I think Steve Mauro and Tino, 2 guys that are behind the hybrid system that has created Traders Reality, we call it the mayonnaise. So the white line, the 200 EMA, when price action is below it, there's a lot of downwards pressure. When price action is above it, it's used, as you can see very clearly, to bounce off it. So I wouldn't be looking at the at a full reversal to the upside until we get above the 200 EMA on the 4 hour, which is the 50 EMA on the daily. So I think that's let me just double check. Yes, the 50 EMA 23,000. Almost. There's a slight discrepancy. So on the 4 hour, I use these two things: vector candles for continuation or for reversal, and the 200 EMA. I keep it very simple. I told you multiple times, my mind is a minimalist mind. It likes to keep a lot of space filled with nothing, just the pure potential of how things can happen. So I like to keep my indicators simple, so that I have clear answers from them. Are we above or below? What is the trend? What is the direction? So we are below the 200 EMA on the 4 hour. The trend is down, and the vector candles show reversal. So the more specific answer would be we might see a reversal in the short term and a full reversal if we cross the 200 EMA and hold it. Now, we are moving to, after the 4 hour, we're moving to the 1 hour, and the 1 hour is a little bit more detailed in terms of how I use it, because the 1 hour has the levels. The M0, M1, M2 are considered support levels. M4, M5 are considered resistance levels. M3 is considered the reversal level. If we hold the M3 coming from the down, let's say the way we've come here, we have come down, and let's say we land in the M3 level. If we land in the M3 level coming from the down and we hold the M3 line, chances are we're going to go up to M4 and maybe M5. Most likely M5, because they correlate like that. M3 to M5, M5, M2 to M4. So odds to odds, evens to evens. I've seen it most frequently than not stop at M4 lately, but that's also because the trend that we've been in is quite bearish at the moment. So again, it is what it is, and there's a lot of downwards pressure. But I have seen it do the M3 to M5 as well. I've seen it do the M2 to M4 as well. I've seen it do also the M4 to M0 move. It's not a frequent one, but it is a big one. So these are the levels that I watch for every day to set my targets. So if I'm trading, for instance, right now I am trading from M1 to M3 on Bitcoin. So my target at the moment is 21.9. This one, the previous a little bit above. Yes, a little bit above the previous high. So I'm watching to see that my targets match the daily levels. And if I go to bed in trades, I wake up at midnight, because these levels reset themselves every midnight. So I have to change my targets, because otherwise Asia might make the move, and it could go, if M3 is at different levels, let's say lower than where I anticipated, Asia might spike it up to M3, do the M1 to M2 lift, and then start reversing down. So I might wake up in the morning with a different M3, which should have been my target, and it's reversed already, so I've lost my profit, which is not an ideal situation. Now, another thing that I watch for is on the daily, I watch daily on the 1 hour time frame, is the pivot point, the PP. So the pivot point changes every day, again at midnight with the levels, and the pivot point shows the sentiment in the market. So it's where it's where the sentiment can turn around. So at the moment, if we are below the pivot point, which means that the sentiment favors the down. As soon as we cross the pivot point and we hold for support, the sentiment changes and it becomes more positive. The pivot point is also an important support and resistance. At the moment, it is our resistance. We've tried to break it 3 times, and it's showing that it couldn't. It came down though, and it still held support, and it's holding support at the psychological low. Now, if I were shorting now, holding the psychological low is again a big level. It's a big statement. The psychological low and the psychological high are levels that are established at on Saturday night, Saturday to Sunday. So they are again big support and resistance levels. We hold the psychological low, that means we're going for the psychological high. If we hold the psychological high, we're going for the pivot point. If we hold the pivot point, we're going for the M3. So this is how we see it going up step by step. On the way down, in my long, for instance, I was telling Roy the other day, 2 hours ago, I need to see how it's back testing the pivot point. If it back tests the pivot point and makes a lower low, it's not good, because we're looking for an M0 situation, because we've come from M2. Now we have 2 options: either go up to M4 or come down to M0. So these are our 2 levels that we can move up to today. So we are in that tricky situation. At the moment, we're holding the psychological low, which is still looking good for my long, but I am gonna watch to see what the next hour does when it turns, because it needs to keep holding it. That is vital. So just to review the level of detail that I use Traders Reality on the 1 hour. On the 1 hour, just like the 1 day and the 4 hour, I use it for the reversal vectors. That goes without saying, but I also use it for the daily levels to set my intraday trading at, and then I use it for the pivot point to gauge the sentiment in the market on a daily level with a little bit more precision. And then I use it for the psychological high and the psychological low to monitor if my trades are going in the right direction, and if I'm not happy with how the psychological high or the psychological low are held, I'm gonna cut my losses and close the trades if they're going against my direction, because a rejection here for a long would mean an M0 and even a bigger spill if the market continues momentum. I'm not willing to stay in for that. Now on the 15-minute is the biggest level of detail that I'm using it at. So on the 15-minute, I am using everything. No, sorry. Yeah, I will say everything, but not. No, I won't be using everything, because I'm not using the 50. I'm not using the 50 EMA and the 50 band. But on the 15-minute, I am using the 800 EMA, which is the blue line, and the 200 EMA. And for instance, in my long, if it gets above the previous daily open and the previous pivot point on the 15-minute, I will be DCAing in and following it up to 21.9. And the reason why I've picked 21.9 is because it's between M3 and M4, and we are coming from between the M1 and M2, so I thought there would be a correlation there. I am checking to see on the 15-minute, for instance, how many candles we have holding above the psychological low. We have at the moment 4 candles holding above the psychological low, including a red one, which shows a rejection there. I don't like that red one, but it might also be part of the lift up. Now, on the 15-minute, I also watch this very importantly for the structure, the new thing that I want to add. I watch it for the structures at the start of the sessions. So you'll hear me say maybe New York will do a double bottom situation, a double bottom structure. I was watching this swing this not this morning, this afternoon, and then came up, and then New York did this, and then New York did that, and I saw in this the potential of a W, and the potential of this W could continue up to here. Of course my target is here because I want to make it, I want to take that profit. So here I entered a long, and I want to take my profits there. So the 15-minute shows you, because it has these levels of it has a level of detail called the Brinks, EU Brinks, US Brinks. So those are the setups at the start of the European session and the US session. So at the US start of the session, we were starting to come down. It did a slight push up, then start coming back down. The US didn't do anything particularly smashing today, but what it did is, at the moment, together with EU, they set a multi-session W pattern. Now, multi-session W patterns can be quite powerful. They can do a lift. They would be what we need for a nice retracement to the 55 on the 4-hour. So this multi-session W, or this multi-session W pattern, or sometimes multi-session M pattern, is more visible with greater detail on the 15-minute. And I do advise you to watch it closely on the 15-minute when US starts, that moment of transition between EU and US, the 4:30 candle, for me 1:30 GMT, and then the next one at 5 o'clock, so the 3 o'clock candle UK time, 1 o'clock, 3 o'clock, yeah, 3 o'clock UK time. I always, the 3 o'clock UK time candle, that's what you need to remember, because it's the highest volume candle. So this was today's 3 o'clock candle, I believe. No, this one. It was this one pushing it down, and again, I believe that confirmed it, but it didn't. It just kept it more in the sideways. So I wish I had a bit more, how can I say, a bit more to say about this indicator. I believe it's a super powerful indicator. I started using it at the start of the year, January, February, March. March, I started using it more intensely. So I've only had 5 months of using it, and it is a very complex one. It's a brilliant one. But I would suggest doing a lot of back tests. I'm gonna do this week, I'm gonna keep an eye on the sessions, and next week on Monday I'm gonna do a training on how the New York sessions went, the moves that happened. So you'll see me making notes on my charts when it came to the candles. So just because it's my favorite session to trade, and I've made most gains in that session, and I believe it's a great one to trade every day, you know, if you want to have a bit more routine in your trading. So that's how I use traders reality. Other than that, a point that I wanted to make, occasionally on the daily I use it for liquidity pools, but and I have mentioned it to you in previous sessions. again, I only check to see that the previous liquidity pool, for instance, here they sold it, the market maker sold, here they bought, here they sold, here they bought back. So I check to see when we go into uncharted territory, where are they gonna sell. So here they recouped all their, so here they bought, here they sold. Now there's another vector at about 18, 19, late 18,000s, early 19,000s, which they haven't recouped. So I believe this would be the next point for them to get their liquidity back from. So I use that would be my extra point that I wanted to tell you about. Just with any indicator, you need to look at it and backtest it repeatedly, because it's the more you backtest, the more you get used to the flow of the indicator and how it works, and you will notice the periods like this one where it starts acting funny and where it stops being reliable. For instance, in this huge drop, if you were to trade on the 15-minute, you would be caught in you would be caught here, because it says we're lifting, we're stopping, we're lifting again, and then we don't actually, we start the sell, and we don't get this indicator until we get here. Here you get the buy indicator, and then it starts spilling like crazy. Here you get the buy indicator, there's a little lift, but then it comes back down furiously. So here you have a stop volume, but it only stops for a little while and then continues down. Here stop volume didn't really pay attention. Price action just moved furiously down, stop volume moved furiously down. I was watching all of this live, so and I could see it. So it's a when the market makers take charge of the market, the indicators, especially, you know, I'll call them light flashing indicators, they fail. They won't fail in the big picture. So in the big picture, you'll see what happened. But at that moment, this was a 4-hour drop out of a. This was a 4-hour swing. Sorry, I had the Ethereum move in mind. This was a 4-hour drop from a triangle, from an accumulation triangle. So the indicators failed here to show reversal to the upside because momentum downwards was too big, which is normal. So what I'm saying what I'm saying here is trust your TA when it comes to bigger time frame moves, and watch for the indicators in these consolidation periods. For instance, here we've had the spill, and here we have the reversal. So I have a fair bit of confidence that this reversal will hold here, at least to get us to the daily open, and maybe a little bit above the M3. So that would be my confidence. But again, I'm watching to see if the psychological low holds, because that is the level that that needs to be the support for this lift. So that's me and traders reality. This would be again, it's a very short conversation, but I wanted to have it with you so that you know, when I make reference in the chats about the pivot point or about the psychological low or about the psychological high, why I'm saying what I'm saying and how I'm using it. Because it would be good to have consistency across the board in terms of the indicators that we're using. You'll see the benefits of having fewer indicators but knowing how to read them well, which is also one of my beliefs as a trader. Use fewer tools but know how to read them well in the different stages of the market. Now, let me check. Michael, do you have any questions about this?
Yeah, I believe you can hear me now, yes?
I can hear you now. Yes.
Okay, I was just curious about I forgot what you called it, but where the market makers tried to stop the spill.
The stop
What
volume.
stop volume? Yeah, what does that look like? I mean, what are what's
It's the purple. It's the purple. The purple vector. It's the purple vector. So the market, the purple vector and the blue vector are both stop volume vectors, and the purple vector means that the market makers are trying to stop the drop. So it's the
trying to
final.
reverse it?
Yes. So it's usually it doesn't mean reversal all of a sudden. There's some residual push down from that intention, but it usually it happens to be like that. Like there's a purple vector, and then there's another push down, and then it starts reversing. So there might be a residual push down from that, and then a lift. Of course, it didn't work in this swing because the swing had too much push down momentum. But for instance, here we see the stop volume vector here. There's still a little bit of push down in the next candle, and then it starts going up. Same here. We have a stop volume vector here. There's still a little bit of push down, but then we see it reverse. I'll show you another situation, because I've seen them a lot of times, and they in consolidation swings. So before the breakout, they work very well. I'll show you the stop volume at the top as well, because it's really interesting to see at the top as well. So here, the purple vector shows that they want to stop the drop. There's still a lower low here, but it doesn't hold, and then it reverses to the upside. And yes, there are 3 lower lows here, but then it keeps on turning. Here, in the same way, there's a stop volume, there's a push down, and then it continues up. And now I wanna show you the purple vector at the top, because at the top it means the same thing. When you see it at the top, it means that it's topped out, and it's here. So there's still some residual energy of pump here, but then it tops out and it starts coming down. Here we have it in its 2 situations. Here is at the top. So when the green and the purple meet at the top, to me that's a big sign for reversal downwards. But then it arrived here at the bottom. So it was at the top, it started reversing down. At the bottom of the swing, there was another lower low, and then it started coming back up again. And I'll show it to you one more time. Here at the top, I remember a lot of nights when I woke up and there had been a swing. Let's say I was shorting and there had been a swing against my direction, and I saw the purple vector here, like in this situation at the top, and I went to bed very peacefully knowing that, okay, this is reversal. So again, but that was because we were in the consolidation phases of this channel. We weren't in the breakout stages. Now we are in the breakout stages. We are in the preparation for the breakout. So you can see the purple vector just like the blue vector. You can see it at the top or at the bottom, and it means that they're towards the bottom. They're trying to stop the drop, towards the top, they're trying to stop the lift. It's how they are doing it with, which makes the difference in colors. Because on the purple vector, it's the sellers trying to stop the drop. So the sellers apply one more time the final blow to the bottom, if that makes sense. And again, in my mind, it doesn't make sense 90%. It makes sense 90%, doesn't make sense 10%. How are the sellers? But again, that's me trying to think like a market maker. I got it in the other way around, like when the market maker with the blue vector, the buyers is the buyers trying to stop the volume. At the top, the buyers are trying to stop the volume by pushing the price high up. They're trying to apply a final blow, but there's no more buyers in the retail for that, and that reverses. I got that in my head, but for the drop, I believe it works in the same way, as in the market makers are the sellers and they're trying to push again to flood the market again, sell again. Okay, we're gonna sell again, but there are no more buyers for them. So that means the drop stops because there's no more buyers for that lower price, and buyers are actually starting to buy at higher prices, and it reverses. But that's, again, that's just a logical, I'm trying to figure out in my head how this works, and I'm struggling a little bit with that. But in the meantime, I'm using the indicator to layer it over my previous TA to find the confluence. Like if I see a vector candle so close to a support and resistance line, I'm gonna take my profit. I am gonna take my profit. If I were in a short, let's say from this point towards this point, which is my if I switch the indicator off, this is my sideways channel. So from this point, let's say I entered a short down to this point, and I see the vector candle here so close, I will take my profit. I will not be waiting for all of this. And if I switch the RSIs, I will have RSI confluence as well. So I have 3 S's to take my profit on momentum. I will not be waiting stubbornly for this to be hit, because it might not. The market might not want to go there because they know there are a lot of take profits there. I'm joking. They wanna trap the shorts rather than give them the profits. Does that make sense, Michael? Mostly.
Well, the way you explained to use it, I just want to review that real quickly.
Sure.
In accumulation phases, it seems to be pretty accurate.
Yes.
But right before breakout or in a breakout, it doesn't seem to hold.
No.
And now I think what you're saying, if I'm not mistaken, is perhaps, or how it might work perhaps, is that I think perhaps if the price is going down and they want to stop it, they're going to sell in a big burst to push it too low. And then nobody else will want to sell it. And then when they stop selling it, it's going to go up, because it might go up. It's not guaranteed, because all of a sudden there's no sellers, so the price goes up. Right? Yes. And then the opposite at the top, they're going to do a big burst of buying when they think they probably do it when they think it's going to work near a peak already. Exactly. And push it a little bit too high. It's too high so that nobody else wants to buy, and then when they stop buying, it's going to go down. Exactly. Yeah. No.
Yeah. That's exactly it, Michael. That is exactly it.
Push it too far in the direction that it's already going.
Exactly. That's what I believe. I think because they have the liquidity, they're able to test the market like that. And most of the times, you know what happens? Most of the times, I believe that's why we see a little bit of residual energy after those indications of reversal, because they do manage to push the market towards that direction. Like you'll see after the blue vector at the top, there's still a little bit of a lift, and then it starts coming back down. The same with the purple vector at the bottom. There's still a little bit of push down, and then it starts reversing upwards. So there will be that. They do manage, more often than not, they do manage to convince the market to go in that direction, but not for a long time. It doesn't work for too long, but I think for them it's worth the investment. They're making the money then, because they're selling at the premium at the top, and then they're buying back down at a discount at the bottom.
Okay, I have another question. The purple candles and the blue candles are the reversal vector
Yes,
candles, correct?
that is correct. Yeah.
Okay, what's the difference between the blue and the purple?
The blue is I believe that the buyers are trying to change. The buyers are applying the final the buyers are applying the blow. In the purple one, the sellers are applying the blow.
Purple is
So
sellers and blue is buyers. Be buyers,
exactly.
right? Okay.
B.
Okay, so it could be either way either. Well,
Mhm.
applying the blow means that they're overactive or they're withdrawing activity, or it doesn't really, you're not sure. You know what? It's not that important. It's more important that I know which ones are buyers and sellers, I think.
Exactly. So
I'm overthinking. I'm
yeah,
overthinking it, but
yeah. Don't overthink it, because I believe now this is a great indicator to zoom in the consolidation on the take profit and the entry points. So this helps you with entering, for instance, in consolidation. When I see a blue vector at the bottom, a blue vector at the bottom or a purple vector at the bottom, I know it's a good moment to reverse towards the up. So they help you in after the big spill. When the market starts consolidating, they help you zoom in, but you will still need your TA and your levels to know when to go in, and you will be backed up in consolidation by the RSIs, because the 15-minute RSIs, both the stochastic and the regular ones, will start acting normal again. So you don't need to overthink it.
right. Another question, but I don't remember. But just an observation. It seems like there's so much on the trader's reality. I guess a few things I could maybe with the settings take off the trader's reality, but it kind of doesn't work well with too much else on the screen with it. It gets confusing real fast.
Yeah,
A lot
absolutely.
easier to use with almost all by itself, or maybe just with a little volume or something.
Yes, like I like to switch it off most of the times. I like to switch it off, and this is how I watch my screen. The only time I switch it back on is when, not the only time, sorry, there are 3 times when I switch it on, is when I'm trying to zoom in on an entry point and I'm waiting for that for that volume indicate. For instance, today I waited for this volume candle to show itself, because the RSIs were not in the perfect situation here, but I know they sometimes might not be. So I waited for this candle to switch green, because again, green means the buyers are dominant. So it's not as strong as the blue one, but it is, the buyers are dominant. So I waited for that. So that's one of the moments I switch it on. The same for the take profit. I would switch it on if I'm preparing to take profit. And then I switch it on to check the psychological high and the psychological low if I don't have them in my mind. But because I'm trading XRP and Bitcoin, and I'm charting Ethereum as well. I've loads to keep in mind. So I am switching it every now and then to check the pivot point and the psychological high and low for the coins. But most of the times I keep it switched off like that, because my TA gives me all that I need. If I flick between my MAs, the 20 and the 55, and my general MA chart, I have what I need. I can see that it's gonna go up. How far up? It depends on how it's meeting the levels of support and resistance. And if I want to see a little bit more when it gets there, I'll switch it on and be prepared to take profit or close trades. But you're right, there's a lot in it. That's why there are people that only use Traders Reality, because they have everything they need and want there, and they have their own trading system built around this indicator.
Is it where it says wide day high and wide day low? Is that the psychological high and low?
This one here.
There's a spot.
No, that is yesterday's high. So this is yesterday's high, and this is last week's low. So these are just other other levels, but I don't use them. Like I use, you see, I don't use them not because I have something against them, but just because look where my sideways channel lines are. Like they're already given to me by my trend lines. I don't need to keep those in mind. This is for instance, if you're watching for a short, you're watching for it to break last week's low. If you're watching for a long, you're looking for it to break yesterday's high. But even if you don't know that this was yesterday's high, you still have this trend line here, which has been touched 1, 2, 3, 4, 5, 6, 7 times in the past 4 days. So of course that's an essential point to watch. We don't need an indicator to tell us that.
I can't seem to find the psychological high. Where is it?
It's what are you looking at? Ethereum?
Yeah, I was looking on my own chart. I put it on my own chart because I wanted to see it, you know, and it's hard, sometimes it's hard for me to see.
Are you on the 15
Your
minute?
charts are on.
Are you on the 15-minute time frame? Because you can't, I think you can't see them on the 1 hour. The 1 hour is reduced in functionality. Yeah, you can't see them on the 1 hour. You can see them only on the 15-minute. That's the way the indicator is built. So here they are, a psychological high for Ethereum, psychological low. Ethereum is...
I went to the 15-minute and I found it. Please keep talking about it though, sir.
Sure. Ethereum is holding them very nicely at the moment. Ethereum is holding the psychological low very nicely at the moment. It's turned it back into support, and it's not only holding that. So this is now. I don't want to overwhelm you, Michael, because again, my mind is so used to the other. Like I've used the RSIs and the trend lines and the patterns so much that I can hold them in my mind very easily, and now I can add this to it, and it won't be conflicting. But there's something here called the 50 EMA band or cloud, which is an area of support and resistance. When we see price action go from this and hold this, this is again a big level to hold. But it's not like we don't have that already, because if we look at where it is at the moment, it's and I'll move to the 15-minute. We are looking at it holding the VWAP, the 55, and the 20 on the 15-minute. So of course, where it is here on Traders Reality, even though they're using different MAs, different EMAs, different functions of the EMAs like this cloud, it is very much what it shows very much the conflict, the fight, the struggle at the moment to hold this. So what we're seeing here in greater detail is shown very easily with the VWAP, the 20 EMA and the 55 EMA on the same time frame. So yeah, for the psychological high and the psychological low, you can use them on the 15 only, and they don't change until Saturday. So they are the same throughout the week. The only thing that changes, the two things that change are the pivot point and the daily levels. Those change.
Are the pivot point and the daily, are those on all different time frames or only on certain time frames?
The pivot point and the levels are, I believe, on all the time frames. They are on the 1 hour. Let me check the 4 hour. They are on the 4 hour. Let me check the daily. Oh, very good. That's what we want. We have a stop volume candle on the daily for Ethereum, which means that the drop is close to being finished for now, for the coming days. We don't have them on the daily. So we have them on the 4 hour, but we don't have them on the daily. Now, let me check the 6 hour, because I know you use the 6 hour. We have a buyer's candle on the 6 hour for reversal. Stop volume, buyer's candle. This is a nice sign for reversal. We have them on the 6 hour. So we have them on the 6 hour, the 4 hour, the 1 hour, the 15 minutes, but we don't have them on the daily. The daily is only for vectors, and I believe the MAs. Yes, the MAs. And for the MAs, Traders Reality uses the 5, the 13, the 50, the 200, and the 800. The 800 is a great one to use on the 15 and the 1 hour, because it translates so nicely into different time frames. So the 800 on the 15 is the 200 on the 1 hour, the 200 on the 1 hour is the 50 on the 4 hour, and so forth. So it's nice to see it translate like that. That's I believe all I have to say about the psychological levels, and
I feel like I have enough handle on the stuff I'm using that I can start to a little bit into that Traders Reality. I like the way you're using it. It's just confirmation on entering and exiting, pretty
yes.
much.
Yeah. And then confirmation that my trade is going the right direction, monitoring the direction of my trade. Like there are days where I enter the trade, like today, where things are not clear. Like it's because we are in this tight area, things are not clear. But I'm really happy to see that XRP is holding the psychological low right now. And because I entered on New York, here. Here was New York, 430. This was my entry point. So I'm happy to see that it back tested, it held, it made a 1-2, and it's holding the psychological low. This is what I want, and this is what I want for Bitcoin as well. So I use it to enter, to exit, and to monitor the direction. Bitcoin is really struggling. I've seen Bitcoin struggling very much lately, more so than XRP and Ethereum. Yeah, it's a really nice indicator to use, especially for targets in terms of the levels. Like I sometimes, because I'm coming from a 4 hour a 4-hour and a 1-hour trading background, but mostly 4-hour, I would have had the tendency to put my target a lot higher. But this indicator helps me set my targets to the closer level on the day, so that I take my profit earlier rather than stay in a trade for longer with multiple swings, because the trades that I'm doing right now are a lot shorter in time, so it prevents me from overstaying. It's not that my target wouldn't get met, it would get met eventually, but there would be so many zigzags in swings that it wouldn't make it wouldn't be worth it waiting for all of that. I hope that makes sense, Michael.
Yes. I mean, the way the market is right now, like you're saying, you got to settle for. I mean, you can take the risk, but it makes more sense to settle for smaller, cut losses rather than try to go for the big risks.
Oh,
To
absolutely.
have more winning trades, and even if they're smaller,
Mm-hmm.
and yeah, you're going to lose sometimes, but
Yeah, there's no winning them all. Like I don't believe that in this sideways there traders winning them all, because I just look at unless you have some incredibly specialized indicators and loads of years of experience behind you so that you're sensitive to these turns, I don't I don't see how you wouldn't lose some trades. And again, most of the trades that I've won recently have had around between 40 and 20% profit. There have been trades where I made 80% profit, trades where I made maybe a 1.2x profit. Most of them were 40% and 2%, because that was the length of the swing. It was a 6% swing or a 3% swing, a 4% swing, and that's where I took the profit at 20. But they add up, Michael. They add up, and you wouldn't believe how they add up. Like if you make 20% each day for 10 days, which means 2 working weeks, you make 2x. You double your money in 10 days. That's the accumulation effect of it. And let's say you have a 2 to 3 winning, so you make 10 trades, you make 14 trades of 15 trades of 20% to keep it round. That means that would be a 3x, but you only win 2/3. You give away 1x and you win 2x. That's, to me, that's winning. To me, that's what pays for my lifestyle, and that's what keeps me in this. At this moment in the market, you will see that our strategy will change to longer time trades when we start having nice swings on the 4-hour, and they're not so there's not such low volume. We will be changing gears, because this is about adapting to how the market works, and I can't wait. I just can't express how much I am looking forward to us getting out of where this is. And starting to have a little bit more volume in the market. I don't see this happening too soon. That's why I'm embracing this change, rather than regretting where are my 4-hour big swings. But at the same time, I am starting to see some 4-hour swings starting to kick in. They're very unexpected though. Like I just to give you, I don't want to waffle too much, because I don't want to keep you for too long, but I wanna make a point. Like this was a 4-hour move, and most of it happened, like it happened textbook on Ethereum. here. Most of it happened in 1, 2, 3, 4, 5, 6, 7. So usually it would take, for something like this to complete, it would be about a week. It took about a day, maybe. Okay, let's include these. Maybe it will be a week till the end of it. But to me, this happened very fast, very, very fast. Like you can see the amount of lead up. If we take this, how long it took this one compared to this one. I find this to be more abrupt than this, but maybe it's just my impression. Anyways, I am starting to see some bigger moves starting to happen in the market, and I will be keeping an eye out on them. So the strategy will be using, might tweak slightly. There it is, going above the mayonnaise. So it's nice. It's really nice to see that for XRP. So that's what I wanted to say.
I did pretty good. I was able to catch 3 different shorts going down. I got in and out of them.
Excellent.
All 3 profit. I'm starting to get a feel. The biggest thing is, again, I'm feeling less and less emotional attachment to it, you know?
Yes.
So it's a lot easier because it isn't that hard. It's hard because of all the holes that go on inside. I got to do it now. I got to get out now. I got to, whatever. It's just, without that, I mean, to get really good is something else, but to win at a small level is really not hard.
No, it's not.
Other than the emotions.
Exactly. I think again, there was a trader that wrote this and said trading is not difficult. You are difficult. Yes, absolutely. And I think the people who succeed in this are the people who manage to keep it simple. And as you said, they manage to control not control their emotions, become aware of their emotions, and not let themselves controlled by the emotions. You can't control the emotions, but you can control yourself in this. So what helped me was have a strategy that's written down, have it ticked, and then I would be calculating and waiting for my entry. Until I got my ticks, I wouldn't get in, because I knew. And of course, there are moments where I get my ticks, I get my yeses, and the market doesn't go my way, because again, it doesn't go my ways. There's a pattern interrupt there, or it just I might have missed something. Either way, it's good to have that strategy down and to follow it as unemotionally as you can. Like, the validation and invalidation for me is essential in this range trading, because I don't have to spend 8 hours in a trade wondering, oh, what's it gonna do? It's very easy for me. If it breaks this line, it's invalidated, that my long is invalidated, take your losses, get out. If it breaks this line, the upwards move gets validated, follow it up. So it's as simple as that, and that keeps me very most of the times very unemotional. I won't say all of the time, because I still have to work on how can I say, it's my life emotions that might get into the way of my trading, issues that I might have with my family or something like that, but not the trading itself. So there might be my emotional atmosphere or context that might get in, that might affect my decisions, and I have to really center myself and see if I'm making a trader's decision or if I'm making an emotional decision. I have to ask myself that question in particular moments.
Yeah. Well, in the beginning, it's a lot worse, as you probably remember, because I'm not having that problem now, but I did recently when a combination of life situation stuff
Mm-hmm.
is, causing a problem, and then, you still have the issue with trading or something,
Yes.
or it spills in, and then it
Mm-hmm.
spills in and causes a problem with trading, and then, it amplifies. But,
Yes.
but, there was a method I explored, oh, I don't know, about a year ago, um, for balancing. I don't know if balancing is the right word. I think it could be a reasonable word, but releasing your emotions. I started doing again just like a week ago, and I find it's a big help. I just feel again. I don't feel apathetic. That's a problem I can get sometimes. It's not that I'm apathetic. It's just not affecting me much.
Yes. Well,
Oh,
that's I think that's a good place to be in. That is a good place to be in. Yeah, like it's a bit like I notice there are moments when yeah, it's just it's not a lack of emotion when it comes to the trades, but it's just the trades are the trades. It's there's when you place a trade, you give your money to the market, and then you watch to see what the market does with your money, and the market can give you a profit based on your investment, or it can take your money because you haven't invested correctly. But then you have your limits, and that's where TA comes in. You have your limits that determine when you have to make a decision. And I believe that again, as an intraday trader, my skills are really being honed in these shorter time frames, because on the 4 hour time frame, I knew how to get in, and I would get in with a big margin, and I would give myself a big space to move in, and I would be DCAing every step of the way, and yes, I would be risking, but I knew that the market would come back to those levels. Here, I don't know when the market is going to come back to those levels. Uh, in we are very far from charted lands, so to say, because we have been dropping so heavily. So right now I have tighter validation and invalidation points, and those validation and invalidations are when I have to make a decision, and the decision is, it hits it, you come out. There's no but no, it hits it, you come out. It doesn't hit it, you stay in. And if I go to bed, I put a stop loss in, because and I know that the market is spiky, but I'd rather risk 20% and then make the 20% back tomorrow, rather than uh, do get caught in a drop like the one on Friday, and lose everything in the position. So it's yeah, yeah, I get. And I think, Michael, how can I say, a healthy relationship with apathy, like not apathy in the negative way, but apathy in the accepting way of apathy, as in
acceptance and apathy, though. I mean, you could also. It depends how you use the term.
yeah.
Acceptance is the word I was looking for, but I said like not apathy, because that's the problem I get when I get apathetic, which
Mm-hmm.
isn't necessarily a negative. It's just that I lose interest,
Mm-hmm.
as opposed to just being accepting, which is more neutral, much more balanced.
That's it.
Like whatever's happening, it's okay.
Yes, yes, whatever is happening is okay. It's exactly as it should be happening. And there's always going to be a next thing. So I accept whatever is happening right now, because this is just a milestone. This is one step on the way to the trading mountain peak. Like it's one step on the journey. There will always be a next step, and there will be the pathway to excellence involves falling in the traps and learning from them, and then moving on again on the path further on to the next step. And we've to accept those traps and those faults and those mistakes, because if we don't accept them, that means we're rejecting the whole lesson of them. And they'll keep repeating themselves. They will keep repeating themselves.
Yeah, I'm gonna write down that thing you quoted from the other person, the person who said, the market's not complicated, you are.
Yes.
Because I know that's when I screw it up, when I let myself get too complicated.
Absolutely. And that's why I wanted to simplify in a way the indicator, and I know for a fact that my simple minimalist mind has been a strong point in this, because it helps me keep things very clear. Like the structures are very clear in my mind. It doesn't mean that I don't get it wrong, but I know that the simplicity of my patterns in my mind helps me in this. And that would be one of the biggest lessons that I would like to pass on to you guys. Making things simple for yourselves, whatever the end strategy that you'll be using will be, because you will come up with your own thing. Like, you'll take what I say, what Roy says, and you will put together your own thing. So that thing will be based on the way your mind works, and keeping it simple and clear is essential. The sooner you get to that simplicity, the better. And yes, learning how to take a loss is part of that. Super. Okay. Anything else? Michael, there's a great book that you will love reading, which is called Trading in the Flow. I'll put it up in. I have the PDF, so I will put it up in the resources for you to download and to read in between watching the charts, which is what I do. That to me is one of my most enjoyable things to do as a trader. In between watching the charts, I like to read. So that's a great book to read.
Thank you.
You're very welcome.
If the method I'm using for my emotions continues to work really, really well for me for a while, I'll offer that to anybody else there. And there's a lot of free versions of it on the internet, so it's not something that someone has to spend any money on.
Please do. I think you
I'll see how it's working first, though. I don't want to rush out there and later on go, it doesn't work for me.
Well, I think that's the thing. Like, we have to share what works, because then we have the experience of it working, and then we also have the experience of how we made it work in a way. So we tested it. And that was in this book. They talk about how the most successful traders are the ones that keep things simple, and how the traders that fail are, sometimes traders that have succeeded in very complicated jobs, but have trained their mind to be complicated, and also people who don't want to accept a loss. So that's reading this book confirmed a lot of the things that I've experienced in my practical experience of trading. When I learned to take a loss, and I remember very clearly, it was a night a year ago. I was in a failing position, and I looked at it fail and passed my invalidations, and I was minus 80% down, and I was like, what am I going to do? Am I going to let myself get liquidated? And I realized then and there that protecting 20% of my capital is one of the most important things that I would do, because with 20% of my capital, I could build it up back to 100%. But if I get liquidated, I won't have anything. So that was an experience that defined how I protected my capital from then onwards. And that's a turning point. You literally, how in life you have turning points and you feel them very viscerally, and almost it's a defining moment in your life. And that to me was the moment, I believe, when I chose to make a living from this, because I was willing to take a loss in order to protect my capital, because I trusted my ability to make more money from money. But until that point, I hadn't accepted that the most important thing to make money is to actually have the money. So it's not the skills, it's to protect the money that you put in the game.
Yeah, without that, there's no game.
Exactly.
I know exactly what you're thinking about, how you feel that, and hopefully I won't be tested that way again anytime soon. But I had a couple of similar situations when I had some after, oh, I don't know, maybe in January. I said, oh, this is the bottom, and I finally started doing some leverage trading, and I had some Ethereum longs and stuff, and it's going down, and I have to decide, am I just going to let this go and go and go, or am I, and part of me is tempted, like, well, if I can't get this now and all this, and the hell with it, I'm going to let it ride. And other parts are saying, no, don't be such a, but it was a real struggle to take some big losses and still have, something to trade with.
Absolutely.
Rather than just let it go, and that's gambling.
That is gambling,
That's what
especially
a losing gambler does.
yeah,
Also gamblers.
that's it. And that's especially when your TA gets invalidated. Like when your TA gets invalidated and that it's crossed the line, then what are you waiting for? Like it's just wrong. Especially when you're not watching it, especially when you're not, finger on the button ready to close the position if it goes wrong.